Hey everybody, Jason Moser here with Brendan Matthews, joining you for another edition of Ask a Fool, where we answer your questions. Today we're taking a question from Brock, and Brock asks, I like dividend payers. Over time, do they perform as well as other stocks? Now, Brendan, this is a good question because typically the way we see dividend-paying stocks, they're more of the sort of the slow growers, so to speak, right? I think the benefit from the dividend payers is that we get that sort of installment of cash in the form of a dividend every quarter, and they're typically reliable. Do you think dividend-paying stocks, do they typically realize slower capital appreciation over time?
I think it's hard to say overall. There have been various studies that have actually shown that dividend stocks outperform non-dividend stocks, particularly those stocks that have a higher yield but a lower payout ratio, which indicates that they're only paying out a small portion of earnings now, and they can grow that dividend payment over time. The one thing I like about dividend stocks is I won't say that they do better as a group versus other stocks, and we don't know what will happen going forward. But one thing I love about dividend stocks is you've got that sense of transparency. The cash in your pocket, a check you get every month, it's an indication that the company is really generating earnings and they're sharing the wealth with shareholders.
That's good. I like that, the transparency, because you know their priorities and the priorities on shareholders. Now, one question I want to ask you is because we see sometimes companies they'll choose either between paying a dividend or maybe buying back shares. Now, in theory, buying back shares should shrink that share count outstanding and make those shares more valuable over time. But if you had to choose between a company you own buying back shares or paying you a dividend, do you have a preference?
So it's really going to depend on where the valuation of the shares. So if I think the shares are cheap, I'm always going to prefer a repurchase because there's that tax efficiency. If I think the shares are too expensive, I prefer to just take the cash and be able to invest it elsewhere.
And I think also, just to remember, if they're buying back those shares, over time you want to see that outstanding share count shrinking, right? If it's staying flat or even if it's going up, then maybe those share repurchases aren't so effective after all.
Right.
All right. Well, hey, great stuff. Thanks for the answer, Brendan. And for more information, make sure to check out Fool.com.